Good morning, everyone. Can I get a quick mic check? Thank you, Fog. I am recording. We are live and direct. L&D, LNC. Good morning, good morning, good morning. All right, so I got about 25 minutes here before Nate's on in Profit Surge. And so when he goes on in Profit Surge, I will jump off, but we'll be happy to leave my screen up if anybody wants just to have something up. Preef, I'm recording. We are good to go. So this is being recorded. This is a little quick session on the sniper trade setups. As you can see, I've got the sniper trade window up. Generally, I'll trade the SPX. I've been playing around with the futures, trading ES, the E-mini S&P 500s. I've also, occasionally I'll also mess around with, the SPY and the Qs. But the idea is that these are all 0 DTE options. So we're trading options that expire today. And we're trying to catch one of two things. We're trying to catch either a 1.0 sniper, which is a reversal like you see here on the Qs, right? We're trying to catch this top and ride it down a little bit for profits. And then another variation is the 2.0 sniper, which you can see this would have been a great one. Here we get kind of a break of this consolidation and we catch the larger move down. So there's a 1.0 sniper, which catches tops and bottoms, like you see kind of happening right now. There's a sniper that fired here on the 1 minute. You can see it happening in real time. And what we're looking for, this is a tool here on the bottom of my screen that is called a Ready Aim Fire. This is a paid indicator. You do not need this indicator to trade these kinds of things. You can make them with your that's not the right one. With MacD and RSI. Okay. So what you'll see is what we're looking for in the Sniper 1.0. Okay. We're looking to catch this turn, and the conditions that we're looking for, right? Condition number 1, right? We're looking for an oversold or overbought condition on the RSI. Have these set at 65 and 35, right? So we need to be oversold or overbought on the 1 minute chart. That's condition number 1. Oversold, right, or overbought. That's condition number 1. Okay. Condition number 2 is we need to see a color change in our early signal candles, right? Color change. This is hard to write with a mouse. Sorry about that. And then the third thing is we need to see a MacD cross. Okay. So 1, 2, and 3. Once we get all 3 of those, MacD cross, you can see right here. If I bring in a line like this, okay, and I draw this line, right, you can see we have oversold condition, right? We have a MacD cross, and we have a candle color turning to yellow, from red to yellow. And these early signal candles are basically just, and I've colored them in a way that they are colored the same as our TTM squeeze play. Okay. MacD is down here, right? Down here, you can see the cross of the blue to the red line. Okay, that's a MacD cross. All right, so when you get all of those signals, right, and what you can see here is that this ready aim fire, it gives me a green arrow, right, below the red line, below these. This is basically your oversold, overbought conditions. These blue lines, so we're below those. And we get a yellow trigger arrow along, that all of these pieces line up together, right? We are oversold, MacD cross, and that shows up here on the ready aim fire. So you can accomplish this without paying for, this indicator is a paid indicator. You have to own it, but you can accomplish the same things without it. Okay. So we're looking for those things. Once we have those, we wait for this candle to close, right? Because sometimes if you're trying to do it while that candle is not closed, it'll show yellow for about 30 seconds, and then it'll drop again and it'll turn back to red, and then the play keeps going down, right? So you have to wait for that candle to close. And if you can see over here on the right hand side, this is the real-time price. But you can see it'll say we're on a 1 minute candle right now, and this is there's 52 seconds left on that candle. So you can see a little countdown timer if you get that setting put on your charts. That way you can say, okay, I've got 37 seconds until this candle closes. Now what we might be getting here is a 2.0, and I'll explain the 2.0 in a second. But this was a 1.0 trigger, and the way I set these up on a 1.0 trigger a lot of times is I will enter when that candle closes in yellow, and I'll set a stop for just below that swing low, or inversely if I'm doing it to the high side, we could be going from light blue to dark blue. I'd set my stop at a break of the swing high. If you don't want to do that visually because you don't trust yourself, right, you can come in here and then, I guess I'll put this over here. This is a Thinkorswim active trader bracket. And as you can see here, these would be SPXs. Let's say I buy one of them, right? These are calls. I have calls up here. I have puts down here. I would need to reset the puts because when I loaded the puts before, we were much higher. So now the puts are way too expensive and way too far on the money, right? And the way I do that, I just click over to this. I'd say I want to load the 5490s. I'd load in the calls to the top. I'd load in the puts to the bottom. And then when I come back over here, I have calls here and I have puts here. And I have a conditional order put in, right? So let's say I was just getting this trigger to happen and I wanted to put in, I have both this is a 2.0 sniper SPX play, which is a 25% profit and a 15% stop loss, right? I also have a very quick sniper scalp, which is more of a 1.0, right? Which as soon as I place my entry, I'm going to get a 10% profit and a 10% stop loss. And once those are in, I can adjust them slightly, so I could come up a little bit more if my stop is not quite 10%, and I can move my target up a little bit as well. But it instantly puts in, when I place my buy, it instantly puts in a bracket order where there's profit target and a stop loss in. So if I have to walk away or something moves really quickly, that it just gets taken out, which, if you don't trust yourself to stop out, as a word of warning, these can get away from you fairly quickly if you're not super disciplined. Okay. So the candle coloring here, and I can share this chart with you. If I share this chart in the room, it'll give you the candle colors here and the chart above. It won't give you this ready, aim, fire, but it will give you MacD and RSI. Okay. So I'll turn it to an SPX. Let's save. And now I'm going to share that chart in the room. Okay. This is a sniper trade chart. It should have all the settings and color combinations you need. Again, this will not load for you if you do not own it. Okay. But you can accomplish these trades without it. Okay. You can accomplish these trades with the RSI and the MACD. Now, as you can see, the candle colors right here that are loaded up are representative of the TTM squeeze momentum bars. Okay, but what they're called is a early signal candle. Right, so the candle colors will change in anticipation of a momentum change. So you see here, okay, you see we have light blue moving up in this momentum, right? And we're light blue, light blue, light blue, light blue. We get a dark blue candle, but as you can see based on where my cursor is, that they have not changed yet on the momentum. So it's giving you a potential early signal that momentum is shifting. Okay, same thing to the downside, and this one is not as clean. Let's see if it's cleaner on the Qs. Where we just were. Yeah, see, so on the dotted line that I had placed in here, right, we get an early signal yellow candle of a potential reversal, and our TTM squeeze still shows one more candle of red down momentum before the turn. So these are early signals that we're maybe getting a momentum shift. Okay, Chris, does that help explain the candle colors? Yeah, okay, good. So for a 1.0 sniper trade, right? You can see one happen up here as well. Okay, so we just talked about this one. You're in and out for about 15%. They're quick hits, right? Sometimes a 1.0 will turn into a 2.0, which we'll talk about. But here's another one, right? You get a dark blue candle. Right, we were just overbought here, right? We get a blue candle there. We get a MACD cross there, right? So condition number 1, condition number 2, condition number 3. Okay, and we get triggered into that, and that drifts down. You make your 10 to 15%. Maybe you catch that break for a little bit more, but that's your sniper trade right there. Any questions there? And then I'm going to jump off here in about 5 minutes to get ready for Nate in his profit surge trader. I have a video on that. Fog, you can rewatch the video. I've said what the conditions are 3 times now. Oversold. candle color, MacD cross. Okay, so here would be a sniper trade that worked. Here would be a sniper trade that worked for small profit. Here's another sniper trade that was a little delayed entry, right? And it probably wouldn't have gotten you to your profit spot. Okay, so they come about 3 or 4 times a day for the snipers. All day, JB. They go all day. There's not a specific time that's better. You know, a lot of times you will see, I mean, you will see a reversal at about 10:30, you know, and this one was what, 10:29, you know, so, and that's pretty common just in the market in general, is that you can kind of see a reversal around that time. Okay, and then a 2.0 trade, let me get rid of these. A 2.0 trade is a continuation. I want to get rid of this. There we go. And I want to get rid of this. So you can see on the chart that we have up now, we have these trend clouds. Okay, green is an uptrend, red is a downtrend. And what we're looking for, and this is a great sniper setup here, right? We're looking for a switch from uptrend to downtrend and a change in candle color to red in this case. So those are the conditions that we're looking for. We're looking for a switch here in trend, right? And this indicator will give you like a white bar when that happens. And then you're looking for red onto the downside, right? Or you're looking for light blue change to the upside. Okay, so either a red change here, switch in trend, and then a change to red. And a lot of times you can set, like you saw earlier, I set a 15% stop loss, 25% target, right? And I do that right here. I have a template, sniper scalp, sniper SPX. As soon as I place that order, I have a 15% stop loss and a 25% target, and I let the trade just play itself out. Now the way I get those in there again is here's my option contracts, 0 DTEs. I come in here, I double click that, I send that to red, or you can copy it, and then I double click that, or right click that, sorry, and I go to yellow. And as you can see here, this one is set to red, this one's set to yellow. So as I'm watching here, we're getting a sniper trade to the upside, potentially. I want to see that candle close. But if that closes, I don't have time for a live one because I actually have to be off the mic here in a minute. But if we get a candle coloration switching to green here, right? That would be a continuation trade of a sniper 2.0. Every time I'm about to put on a trade, less, because I want them to kind of be at the money. I don't want one of them to be way, way, way in the money and cost me twice as much. I'm trying to keep my, it just helps me keep my risk reward the same on each trade. Can I link what through to chat? Yeah, green is a hollow candle. That's correct. And a solid candle is a red candle. That's so you can see these other colors without having a standard, having a standard green and red candle. Any quick questions there before I have to jump off? The one thing I recommend is making sure that you're really disciplined. I mean, if you're playing the Qs and the SPY and you're playing 1 or 2 contracts, it's fine, and that's a great way to learn. That's the way I would recommend learning. But if you're playing the SPX, which is 10 to 1 basically on the SPY, one contract is going to cost you roughly $1,000, and it moves, and it moves quickly. So you need to be. My recommendation is to practice these with one SPY contract, and then move to two until you're comfortable and you understand it and you're profitable, and then you can, ES is the same. That they're about the same price as an SPX futures. These trade after hours, of course. SPX is cash settled, which is kind of nice. But anyway, that's the Sniper 1.0 and 2.0. I'll be in chat and I can answer any other questions, but that was a quick little 25-minute. Yeah, you can also paper trade, and I highly recommend the paper trade version in TradingView, because you can get your buttons right up here. So if this is the ES and I say, oh, okay, I think I'm gonna go long, I can hit that long button, and now I'm long 10 contracts, not 10 shares of the ES, and I can even come in and go, okay, my stop loss is going to be right down here, my take profit is going to be up here. If I could grab it, there we go. And now I can just let the trade play out, and I'm using pretend money, right? So that's another great way to test it. But your emotions, paper trading is so different than real trading, because fear and greed don't factor in, and so once you've practiced with some paper trading, I still recommend doing one contract of the SPY or QQQ. So you're not risking your whole account on some of these trades. The tendency is to, some of these trades can make a lot of money, especially if you're trading the SPX. But you'll find you can also lose money just as quick. So learn the mechanics of the trade and learn the emotions, and then start sizing is what I recommend. Okay, y'all. Nate's gonna be on Profit Surge. I'm gonna jump off. I hope that was helpful. I will get this posted up to YouTube.